A lot of people spend a great deal of time asking what they should invest in. Which fund, which stock, which market, which opportunity. What I think a better question is this: do you actually have a sound investing method? Because a complicated method might look impressive on paper, but the real test is how it performs when things go wrong. And that, I think, is where many investors get misled. They judge a method by how sophisticated it sounds. They judge it by complexity. They judge it by how many moving parts it has. They judge it by how intelligent it appears in theory. But a sound investing method is not defined by how clever it sounds. It's defined by whether it remains usable, survivable, and effective over time. So, in this episode, I want to give you a practical framework: 5 traits of a sound investing method. Not to turn you into your own portfolio engineer overnight, but to help you evaluate more clearly whether what you are following is actually sound. A sound investing method should have 5 traits. First, consistent savings discipline. Second, risk management rules. Third, simplicity. Fourth, horizon alignment. And fifth, emotional robustness. Those are the 5. And I want you to notice something immediately. None of those traits begin with product selection. None of them begin with prediction. None of them begin with finding the next impressive idea. Because good investing is usually not built on impressive ideas. It is built on durable process. Let us start with the foundation: consistent savings discipline. Because no investing method works if money is not consistently entering the system. This sounds obvious, but it is often underestimated. Because people become very interested in returns, very interested in markets, very interested in asset choice, very interested in optimization. But before any of that can matter, capital actually has to be put to work consistently. Savings discipline is what turns intention into compounding. And without that, investing remains occasional. It remains enthusiastic in bursts, but weak in structure. And a sound method cannot depend on occasional enthusiasm. It has to create steady participation. And that is one reason I said earlier in this series that most investing success comes from things people barely think about enough. A person can spend a great deal of effort trying to choose well while failing to build the simple discipline of regular investing. And that imbalance matters. Because the first sign of a sound method is not excitement, it is continuity. The second trait is risk management rules. A method cannot just tell you what to do when things are going well. It also has to tell you what kind of behavior is acceptable when things are not. That is what risk management does. It prepares for uncertainty. It protects not only your capital, but your behavior. Because without risk management rules, portfolios get pushed around by panic, false confidence, and emotional overreaction. And this matters even more because, as we discussed in the previous episode, diversification alone is not enough. Diversification helps, but it doesn't replace risk management. A sound method does not assume problems away. It prepares for them. It asks difficult questions before stress arrives, like what happens if markets fall sharply? What happens if several holdings weaken together? What happens if the investor becomes fearful, impatient, or overconfident? If the method has no answer to those questions, then it is not yet sound enough. The third trait is simplicity. And I think this is one that many intelligent people resist. Because complexity often feels sophisticated. It looks advanced. It sounds impressive. It creates the appearance of expertise. But complexity has a cost. A complicated method is harder to follow consistently, harder to understand, harder to maintain, harder to apply under pressure. And the simpler the method, the easier it is for people to stick with it. Now, simplicity does not mean carelessness. It does not mean shallow thinking. It does not mean the method has no nuance. What it means is that the method is clear enough to be followed by a real human being in real life. And that matters more than people think. Because the real test is not whether the method sounds smart in conversation. The real test is whether someone can actually live with it. Simplicity is not a lack of intelligence, okay? Very often, it is what makes discipline possible. The fourth trait is horizon alignment. A method has to fit the life of the investor using it. That means goals matter, time frame matters, cash flow matters, the actual shape of life matters. Short-term needs and long-term capital should not be managed as though they are the same thing. A person, for example, saving for near-term obligations should not behave as though everything can be treated like long-term retirement capital. And a person building long-term wealth should not constantly sabotage the process by making short-term emotional decisions. This is where many methods fail. They may sound mathematically sensible, but they do not fit the investor's real timeline. And if the timeline is wrong, the method becomes unstable. Because the person using it will eventually be forced to behave in ways the method did not account for. So a sound method is not just mathematically sensible. It is personally aligned. It respects the investor's actual horizon. The fifth trait is emotional robustness. And in many ways, this is where the whole framework becomes real. Because markets will test your conviction. Life will interrupt plans. Stress will change your behavior. And if the method only works when you feel calm, confident, patient, and perfectly disciplined, then it is not robust enough. An investing method must work not only in theory, but in the messy realities of life. That is the real test. Because real investing does not happen in a laboratory. It happens while people are busy, while families need attention, while careers become demanding, while markets become noisy, while fear and optimism take turns trying to hijack your judgment. So a method has to be emotionally survivable. It has to reduce the number of decisions that depend entirely on mood. It has to give structure when your conviction becomes weak. And it has to remain workable even when you're no longer operating at your ideal level of calm. If it cannot survive real emotion, then it cannot survive real investing. Now, each of these 5 traits matters on its own, but the real strength comes from the way they work together. Savings discipline creates continuity. Risk management protects against fragility. Simplicity improves follow-through. Horizon alignment improves fit. Emotional robustness improves survivability. And when those are present together, something important begins to happen. The method becomes livable, not just theoretically attractive, not just intellectually impressive, actually livable. And that, I think, is one of the clearest distinctions between weak methods and sound ones. Weak methods often look good in ideal conditions. Sound methods endure real conditions. A sound investing method is not just about maximizing returns. It is about building a process that can actually endure. Now, once you see these 5 traits clearly, something else usually happens. Your standard becomes higher, and that is good because many people begin by thinking they simply need better investment ideas. But after a while, they realize that is not the real need. The real need is a method that is coherent enough, disciplined enough, and durable enough to fit real life. And that is not always easy to design casually. Understanding this checklist is one thing. Building a method that truly satisfies it is another. Because what sounds good in theory can still fail in practice. What looks diversified can still be fragile. What looks sophisticated can still be too complicated. What looks disciplined can still fall apart when emotions become strong. And that is why many people eventually realize they do not merely need investments. They need a structured method built around their life, risks, and behavior. So if you want the checklist version of these 5 traits, comment method. Comment method and we will send you the checklist. Let me close it this way. Good investing is not about chasing impressive ideas. It is about following a method that works consistently through reality. And a sound method has identifiable traits. It saves consistently. It manages risk. It stays simple enough to follow. It fits the investor's time horizon. And it remains workable even when emotions become noisy. That is the standard. So the real test of an investing method is not whether it sounds clever. It is whether it helps a real person invest well across time, uncertainty, and emotion. And that, to me, is the difference between having investments and having an investing method. Again, if you want the checklist, comment method below. I'm Juan Casas of Beacon Wealth Advisory. Thanks for watching this series on investing for high earners. I'll see you in the next video.